2025 just closed as one of the strongest years for stocks in history. But here's the question nobody is asking. Does that make 2026 easier or more dangerous? Hey YouTube, Julian here, and first of all, Happy New Year and welcome to 2026. Now, before we jump into the charts, I wanted to zoom out, quickly recap just what happened, because understanding how we arrive here is the key to not getting blindsided to what's coming next. 2025 was a massive year for the markets. The S&P 500 surged like crazy. Big tech stocks exploded higher. Liquidity came back. Risk appetite returned.
Nice.
So in this video, I'll be doing three things. First, a quick recap of what drove the market in 2025. Then we'll go through the charts for the Max 7, the S&P 500, and commodities like gold, etc. And finally, I will be talking about what I'm watching as we step into 2026 and where the real risk and opportunities are. So if you guys are ready, let's go.
Now, if you like videos like this, I'm going to give you 5 seconds. Help me out by clicking subscribe and also commenting more so that I can produce more videos like this for you guys. 5, 4, 3, 2, 1. Without further ado, let's get back into the video.
First up, let's start off with what actually powered the 2025 rally. What drove the market higher? Now, it really came down to three simple things. First, financial pressure eased. If you recall, coming into 2025, interest rates were still sky high at about 4.5%, and that kept investors cautious and defensive. But as bond yields stopped rising, the US dollar started weakening since as early as January 2025 all the way until the end of the year. And the Fed quietly started adding liquidity back into the system again through quantitative easing. Now, this caused the pressure to slowly ease, and it made it easier for money to flow back into stocks and risk assets. Secondly, fear about the future faded away. Investors stopped worrying that interest rates would stay high forever and keep weighing on the markets and started believing that the conditions would slowly improve. And when the Fed started to cut interest rates first on September 17, 2025, it didn't start the rally. It confirmed the shift in sentiment. Then subsequent drops happened in October 29 and the third one on December 10th respectively. That is what gave people confidence to start buying again.
Shut up and take my money.
Thirdly, money and emotions started lining up. Capital flowed into the strongest names like the Max 7 and AI, with Alphabet being the world's most profitable company with 65.8% returns, surging even past Nvidia this year with still a modest 40.9% returns. And at the same time, people shifted from being scared of losing money to being scared of missing out. That combination is what sustained the massive uptrend. Now, let's go into the charts and see what the markets are telling us. So right here, you can see that the S&P 500 tried to break this high. However, it was not able to do so and thus went back down into this level of resistance. And right now, what I foresee is that this trend line right here is currently still being respected. So if this trend line breaks, I do foresee that S&P 500 does have a chance of going down, but if it gets respected, price would tend to start moving higher and eventually, if possible, getting a stronger close above this resistance and start moving higher up. Now, there's something else that I want to show you guys on SPY, and this is something interesting that I've been looking at for some time right now. So I want to show you an interesting pattern that I noticed on SPY since 2008. Notice that after 2008, which is this candle right here, notice how there is usually 2 to 3 years of bullish candle before a bearish candle appears. So let me show you what has happened. If I were to zoom in a little bit more, you can see it closely. So this is 2008. This one is 2009, 2010 being 2 bullish years. Then we have a bearish year on 2011. 3 bullish years, 1 bearish year. 1, 2 bullish year, 1 bearish year. 1, 2, 3 bullish year, 1 bearish year. So coming to right now, 1, 2, 3. 3 bullish years. What is likely to happen to 2026? I'm going to leave that for you to think about. I'm not saying that 2026 will be bearish, but it does mean that the odds of a tougher, less smooth year are higher than they were a year ago. Now, this is not a prediction, it's just a reminder for you not to get complacent after a strong run and to stay flexible and risk aware this year. Next, let's look at Apple. Apple, as you can see, has been playing sideways for the longest of time, with the last trying to break this level of resistance but not being able to come back and closing down right at this support right here. So right now, I would love for Apple to break through with a body candle close above this resistance or break below right here to have a clearer indication on where it is going, either to the upside or to the downside. Next, let's look at the most profitable stock in 2025, which is Alphabet or Google. You can see that same thing happened with Google, is that it actually went up, tried to test this resistance, failed to break through, closed the day below again. So what this tells me is that Google is still sideways and trying to decide on what it wants to do. If it wants to go up higher, it has to break above this level of resistance, continue its way higher. But if it wants to go down, it will break below this level of support, continue its way downwards. So let's see what happens to Google. Same thing here with Microsoft, again also playing sideways for a very, very long time, literally just bouncing between this level of support and resistance. So in order for it to go up higher, it needs to break this level of resistance. If it wants to go down lower, it needs to break this level of support. So let's see what's happening to Microsoft. Tesla started showing some bearish movements. You can see that Tesla has broken past this level of support and it's on its way next to this next level of support. And what it wants to do is that it will probably be playing within this level of support and resistance, going sideways until it can actually decide what's going to happen. So this is what I foresee for Tesla for now. Next, let's look on to Amazon. Amazon also failed to break past this level of resistance and therefore close below this level of resistance. Right now, I look at Amazon. I foresee that it will head down to this level of support and start continuing its sideways movement since it wasn't able to show enough bullish pressure to go up higher. Nvidia also testing this level of resistance. Right now, it has tried to touch the level of resistance twice. However, doesn't seem like it's able to close strong bullish above it. So it seems to me that Nvidia is still likely going to play sideways until a push up or push to the downside actually happens. Next, let's look at Meta. As you can see right here, Meta did have a break to the downside. So I expect that Meta would actually be heading down to this level of support and likely still continue its sideways movement until a breakout to the upside happens. If it doesn't break this level of resistance, I don't see Meta being able to go up higher. Now, the thing is that for Meta to go up higher, it has a lot of resistance to break through. You can see right here, this is the first one, this is the second one, and this is the third one, right? So until this area here breaks, I don't see Meta actually going up to the all-time high. So these are some of the areas that it has to break through before it can continue its movement upwards. Next, I want to go through an analysis by Hi SGSOXL Hello. And this request is to go through SOXL. So as you can see, this is SOXL. It is currently between this level of support and resistance. And for it to go higher, this is a strong level of resistance that it needs to break through. Currently, it has tested twice, but failed to actually break through. If he wants to break through it, I would say at this level, possibly 50, then it has a chance of going higher. But if not, it will still be playing sideways. Now, if he wants to go down lower, it will break through, I would say 40, like what happened here. It did show signs of wanting to go down, but the bullish momentum pushed it back up above into this level of support. This actually pushed it back up higher. Next, let's look at the macro outlook of gold. As you can see right here, gold has been pushing up pretty strongly, even going up all the way until 4,500. But what happened was that the last week of December ended it being bearish. If you ask me, gold still looks bullish on the weekly perspective as long as this area here does not break. But if this area breaks, then gold is likely going to go downwards. So as long as this area still holds, I would say that gold still has a chance to go upwards. Right now, it's kind of retracing, so I foresee that it may likely retrace down to this area before continuing its movement upwards. Taking a look at Bitcoin, you can still see that Bitcoin is still playing sideways throughout this level of support and resistance. It still hasn't broken through this 90,000 level. I would say, if I were to be a little bit more exact, 95,000. If it breaks this level of 95,000, now and it foresee it to go up. But if it doesn't, it's still likely going to be sideways. And this is actually something that has been ongoing for the longest of time, I would say, since November. So it's been happening for a few months right now. And the initial reason for Bitcoin moving sideways was because of the options that was actually expiring for Bitcoin on December 26th. But still seems that after the options has expired, markets are still not moving anywhere, even though Michael Saylor from MicroStrategy has already pumped in a few billion once. I think in the beginning of December, this was around $980 million, almost a billion. Second time, I would say also close to $1 billion in the middle of December. And the third time, I think close to 100 million that he actually pumped in. And even with all this inflow of purchases from MicroStrategy, Bitcoin still didn't really move much. So this is telling you that there is still a major fight between the bulls and the bears. And we only need to wait and see what's going to happen. So the big question now is, what kind of year is 2026 likely to be? And the honest answer is probably more complex than 2025. The market is trying to price in a few big things at the same time. First, more rate cuts may be coming, with the next one likely in April. That sounds bullish usually, but it also means that growth is slowing. So rate cuts can support market in the short term, but it also tells you that the economy isn't accelerating. That creates a more fragile environment where good news can push markets higher, but bad news can hit harder too. Secondly, we are heading into a leadership transition at the Fed. Jerome Powell is likely to step down in May, which causes uncertainty. Markets have been anchored to the same framework for years, and when that changes, expectations need to be reset. And Trump has also said that he wants someone more comfortable with lowering interest rates to take over the Fed. While it isn't confirmed yet who will replace Jerome Powell, but what may happen is that people start to get optimistic, push markets higher before anything actually improves. And that's fine for a while, but it also increases the risk of disappointment later if things don't improve as much as expected. On top of that, I'm also watching tech very closely. A lot of the gains over the last few years were driven by AI and big tech, and that trade is now very crowded. That doesn't mean it has to crash, but when a trade gets crowded, it becomes more sensitive to bad news. We are also talking about rising regulatory pressure, like Google's antitrust investigation, which ended up with them being slapped with a 2.95 billion euro fine. Elon Musk X wasn't spared either, with a 120 million euro fine for lack of transparency, along with Apple being fined 500 million euros and Meta fined 200 million euros for breaching DMA rules, respectively. And finally, a lot of the AI investment story is starting to get questioned. There's a huge spending on AI, but not all of it is transiting into profits yet. And that's where the gap shows up. Market tends to reprice expectation. That's part of why we have started to see more volatility and pullbacks in some AI-related stocks.
An exceptionally brutal day on Wall Street.
Decidedly red, especially the NASDAQ.
Meta and Microsoft shares have fallen in after-hours trading.
So if there's one takeaway from this video, is this: 2025 rewarded participation. 2026 will likely reward awareness. So stay flexible, stay curious, stay disciplined. Don't carry last year's mindset into a new environment. Now, if you found this to be useful, help me out by hitting the like button so more people can see it, and subscribe if you want more macro breakdowns and chart walkthroughs like this every single week. Happy New Year again. And if you want to see how I turned $82 into $10,000, then I'll share the link of the video right around here. And I look forward to seeing you in the next one. Bye-bye.